You're tuned back into agriculture today, and we continue our show with our conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue talking about our grain market, picking up talking about wheat domestically.
It's interesting that yesterday on the closes on the hard red winter wheat contract trade on the CME, we closed right right on $6 and 3/4 cents. So we have these reference prices we watch at the market. I'm sure a lot of wheat producers, for both their anticipation of prices and for revenue, would like to see a 7 in front of that instead of a 6, but 7 or 8 in front of it. But the key issue is, I think, continued slow U.S. wheat exports. For the supply-demand balance sheet that came out of the March WASDE report, just slight changes, a little more, just about 10 million more imports anticipated. Most of that probably from our neighbor to the north, up to 140 million. No other changes other than a little bit of a decrease in exports from 850 down to 835. And those changes came basically in hard red spring wheat and in durum wheat. So that would make sense. If we have more imports coming in from Canada into the U.S., then you're competing strong with those northern border commodities all that much more, and just have what you have. And that there was a slight decrease in the projected price down to 550 per bushel. Ending stocks actually up 25 million with some of the changes we've talked about. So not a lot of change. And the USDA's projection, again, from basically 46.1 million acres planted in 24-25 to 47 into 2025 now. Of course, we kind of know what the hard red winter wheat numbers are. They're up just a little bit, and you have sideways a little bit higher spring wheat numbers as well. So we'll see where all that goes. And if you look at I guess I would say that for what we grow in Kansas, hard red winter wheat, again, the balance sheet numbers, the stocks to use last marketing year, 23-24 marketing year was about 49%, projected right now at 57, and we'll see where we go with exports and as such. Guy, how about the international side?
Yeah, look, just picking up from your stocks to use numbers domestically, again, looking at the major exporters of wheat, we're looking at just under 10% and about 9.8. That's starting to get tight, but not overly tight. I guess the key thing for wheat, world production was increased 3.4 million metric tons to a record 797 million metric tons, up from slightly again from last year. So we seem to be awash with wheat to the point where we're pricing wheat into the feed ration. As I mentioned earlier, when we're looking at the coarse grains complex, and increasingly so around the world, wheat is pricing itself into feed. Really not any major changes in some of the big picture numbers. European numbers unchanged. Russian production was unchanged, but it's tighter than it was last year. Ukraine is also a bit tighter. Combined exports for both Russia and the Ukraine are forecast to drop 13.6 million metric tons, which is quite significant from last year. That should at some point lend itself to pricing of wheat, as Black Sea tends to be cheapest wheat out there. Did have a slight increase in Argentina of just under 1 million metric tons. Australia number was increased to 2.1. They'll be planting that wheat crop here in the next few weeks. They'll commence. And exports were up 1 million tons to 26. Combined exports from those southern hemisphere countries of both Australia and Argentina was up nearly 10 million metric tons, up to 9.4 million from last year. Canadian exports were held steady. Again, looking at China, their estimates were unchanged at production at 140 million metric tons, but USDA lowered their imports by 1.5 million tons to only 6.5 million. And I would expect that number to maybe work itself lower. So look, it's hard to get optimistic on wheat. Corn's going to lead that. At the moment, I tend to be quietly optimistic later in the year that we could see these commodity prices rally a bit.
Guy, what are some macroeconomics issues or updates you'd like to give our listeners?
Yeah, from a sort of a lackluster USDA report, the big mover in the last week has been the US dollar. We've lost probably 4% or better of the value. We've dropped from 107.5 on the index down to, we saw a bit of strength today as it rallied back up to 103.8. But that big drop in the U.S. dollar should lend itself to commodity prices. I guess it hasn't followed through as much as we would like to see, but that weaker dollar is always strengthening commodity prices. Just looking at international shipping, we did see the Baltic Dry Freight Index rally a bit. It's above 1,550 at the moment. I sort of look at that as a good sign. That's an indicator the global economy is probably a bit stronger than what maybe we think with a lot of the economic news coming out. It also makes me a bit more optimistic that this disruption from these tariff trade discussions aren't going to be as disruptive as what we think. The thing I say to a lot of people is these tariffs is more going to change the trade flow and it's a price spread relationship, not necessarily an absolute change or loss or gain in demand. So we need to keep that in mind. But I think the biggest impact from the tariff implications when they finally settle down, and they're going to take a while to settle down, is we're going to see a notable shift in what we've come comfortable with as traditional trade flows.
Did you guys see any surprises from this past WASDE report?
Really, to some degree, the USDA by indicating no changes whatsoever in the corn and soybean balance sheets pretty much indicated to me that they were waiting for the one thing, at least on the one hand, waiting till the stocks report came in and gave them more information to confirm how much feed usage or other things there might be out there that they didn't really haven't really accounted for yet. I think that the target is aimed again at the end of the month for the March 31st situation for both stocks that will affect old crop usage for these crops, corn, grain, sorghum, wheat in particular, and then the planted acres. And the markets at this time, I think I don't know if I'd call them docile, but seasonally we're watching U.S. weather maps and foreign weather maps as well at this time. So we're kind of shifting gears from that old crop balance sheet focus into new crop prospects, and with that, likely to have volatility that we don't anticipate. So we'll see where all that goes. How about you, Guy? Did you see anything out of that?
No, I really don't have much to add there. Yeah, I think we're moving into those weather markets. It is middle of March now, and I know my farmer friends are wanting to burn that diesel pretty quick. They enjoy doing that, and then again, looking at those southern hemisphere weather conditions as we're seeing that Argentine, Brazilian crops come off, and then planting of the winter wheat crops in the south there as well. So yeah, we're starting to enter that weather market period after coming out of the deep freeze here in Kansas.
As you both respectively look at the markets, Dan, you domestically, Guy, you internationally, how do you feel the health is of them?
Sorry, how do I feel on
the health of the markets internationally?
Oh, go ahead, Guy, internationally, and I'll talk domestically after that.
Look, internationally, the big driver there is just where this change in tariff situation will finally change. And we get new news every day coming out from one side or the other, one country or the other, and it's going to have a notable impact. I think at the end of the day, when reason prevails, we'll be in a better situation competitively, but it's going to take some time to get there. We've been sitting in this situation's been evolving for the last 20 years, and we finally sort of have had enough. And one more fair and balanced playing field to trade on. So it's going to take some time to work through that little kerfuffle until things settle down. So I think we just need to be patient, and I think reason will prevail.
And I would add too, if we have time, that we hear in the news discussions of at least a ceasefire that's could occur in the Ukraine-Russia war, and what that might do to trade. We're unsure. However, Guy, at least in my perception, that any sanctions that there were before were leaky enough that they're almost discounted on the world stage in terms of what Russia actually shipping anything. There have been ways or pathways carved out around that. So I don't. So that's in play. And again, and we hear of China and Canada having spats about this or that commodity going in, and so you've got not just the U.S. in the middle of trade discussions, but also others, ongoing issues. We hear about, I think a month or so ago, we were talking about the possibility of the Panama Canal really coming into play. And now that's been, I don't know if it's completely dealt with, but major changes happen pretty quick there. So we'll see where all of this goes.
Yeah. Well, the inflation numbers came in a bit less than expected. I think, if we could get our hands around that, particularly on the fiscal spending side that's driving that, I think that'll help. Oil prices have come down pretty steadily since the first of the year. We're down around $66 a barrel for West Texas Intermediate crude. That energy prices, and if we can sort of get this food inflation particularly under control, not only in the U.S. but internationally, particularly, that will lend itself to a more settled and certain market.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby, very much. Thank you, Guy.
Shelby.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back.